So there are days when you come into the chart and you really cannot understand structure. It happens. It doesn't mean you don't know what you're doing in the forex market. It just means that sometimes you need to tilt your focus to other time frames. So for example, you come into the 4-hour or the daily time frame and you really cannot see anything, or structure is really not making sense. I think that is a time for you to probably scroll through other time frames to see if there is anything you can find out that aligns with your trading strategy. On USDJPY today is one of those days when structure was inconclusive, when you don't know if you're bullish or bearish. So how did I tackle that? Let me show you right that on the chart. So on USDJPY, this is the 4-hour time frame. So there is really not much information to be working with here, because all I can see is that in terms of structure, this point here made this high. Now this higher low went ahead to make all of these highs right here. So we know we are in this push, one big push to the upside. So, and a relevant structure that was broken on the 4-hour was this structure here, this higher high to the left right here. So coming down to a smaller time frame, like I always do, is I want to look just a little bit to the left and know what is actually happening. So what I can see here is that while we were trending to the upside, we were creating all of these little demand zones, higher lows, all of these higher lows that we are creating big impulse pushes to the upside. So we had a push, a retracement, another push, a retracement, a push, a retracement, just this tiny one here, a retracement, a push, a retracement, then all of this price action. So while we were creating all of this, I knew that this point here, we had a break of structure. We can consider this as a break of structure right here. So internally, we were having all of these higher lows, higher highs, higher lows. But at this point, when we created this last higher low here that created a higher high, we had a break of structure, right? Now, this first break that we had here was just with a wick and not with a full candle body. So this point here, we had, this was where we had the true break of structure, the full break of structure. Now, if that happens, that means automatically we are in a bearish leg right here. So this point becomes a bearish leg. Now, this bearishness is a temporary bearishness, probably to make a retracement of our H4 push to the upside. So we had a big push to the upside like this on the H4, and then we started seeing all of this bearishness right here. It doesn't mean that the market has switched to bearish. Just intraday, we might be bearish, but that bearishness might be just to make a retracement to certain levels, probably discount levels, or to demand zones on this H4 push to the upside. So let's take this out and continue. Quick one. Okay, so if this is a supposed bearish leg, then this area here becomes an area of supply, not an area where I will be trading with a limit order, but an area to just mark out to observe what happens when price comes into that area. Right, so I have this last level here with an imbalance, so that area becomes a supposed supply level. Now I'm not going to just set out a trade this way, a short position just like this. No, but I want to be aware that this is an area that we can likely have a sell-off, because it's a supply zone, a supposed supply zone. Until price comes in there and gives a reaction, it's still just a zone. I wouldn't call it a supply zone yet. So what I saw was price came into this level here and gave lower time frame confirmations, and then we had a sell-off. But that's not what I want to cover in this video. I want to cover the trade for today. Now, all of these levels marked to the left becomes, they were my demand zones. So they were demand levels, right? So price sold off here. Now, I don't know which of these demand zones is going to take price back to the upside, right? Because after this retracement, I'm expected to see, or I expect to see, a new higher high formed. But until that happens, it hasn't happened. But I should also be aware that when price comes into my demand zones, I should be able to react if it shows me lower time frame confirmations like I want to see. So I want to talk about this price action that played out at this point here. So quite a short intraday buy, and coming to the smaller time frame, when price taps into this level right here, I like to play the M1, right? So now I know that this is quite a big zone, and this is the entire POI is about 41 pips. So it's quite a big zone. So I like to play the first reaction. When price comes in, I play the first reaction. But I know that because this is just the top of the zone, there could be POIs here, there could be other POIs in this level. So what I do is I play the first reaction and get to certain levels. I take my TP at certain levels because I know I'm not playing from the lowest imbalance in the POI. I'm not playing from the lowest point of interest in the POI. Okay? So what I mean is, if I'm looking at this point of interest, I can see an imbalance right at this point, which was where price reacted from. On the lower time frame, I can see another imbalance on this point here on the M3 time frame. There was an imbalance there, also marked out. So this quick move to the upside, I just scale down to my 1 minute time frame. And on the 1 minute time frame, what I want to see is how was price coming into that zone. So it was clear to see we are creating lower highs and lower lows. All of this price action, we are creating lower highs that made lower lows, lower highs that made lower lows, lower highs that made lower lows. And then after that, we had a break of structure. So after this break of structure, we had price break structure here, also broke this internal supply zone right here, this minor supply zone. Price broke that structure. Now, this area is going to be a point of interest, right? And my extreme level here is also going to be a point of interest, all of these zones. So I know that instead of me to randomly take my entries off this level with stop loss just beneath this low to run price to the upside, which wouldn't give me the best of risk to reward, what I like to do is to play the final lower time frame confirmation, which is we can see that coming down to these areas, we had price create this high, made this low right here. We had a push up, and then we had a minor run on liquidity, breaking structure. At this imbalance right here was my trade. So at this point right here was my trade. Stop loss now refined to this point here, a 10 pip stop loss. First TP will be to target this high, and then subsequently all of these minor supply levels right here would be an area to target. So just to this point right here,